16.7 previously. And the 6-month expectation index was 19.9 versus 14.3 prior, so a bit of an improvement there. But overall, activity looking very sucky, but with some moderate price pressures seen in that one. Some other data as well, import and export price indexes out as well, month on month, both showing positive and beating expectations. So potentially adding some inflationary pressures in the pipeline, or showing that prices are still going to be sticky in the US. Year on year, we saw a lower number, but not as much as expected, nor as much as previous. And the same goes for the import price index, down 4.4% versus minus 6.5 expected. So again, on the inflation front, things looking a bit sticky. Coming over to Canada, and CPI again proving sticky. The headline number rose more than expected, up to 3.3% from 3% expected, and higher than the 2.8 previously. Then we get the 30 different attempts at measuring core numbers. The BOC core came in at 3.2%, unchanged over the prior month. Was expected to drop to 2.8%. That held up. And then we've got all the other measures, medium, trimmed, common, so on and so forth. Looking very sticky. The trim mean beat expectations but only dropped a pip. Median stayed unchanged, and the common beat expectations by a pip but still lower. So headline inflation up, core inflation measures mostly down, some unchanged. Again, sticky is the word that we're going to be using for this. Not such good news for existing home sales in Canada. Is it even on there?
No, they never show it. One of those that's never on that calendar.
Yeah, but it's posted its first drop in 6 months, coming in at minus 0.7% from up 1.5% previously. So not looking so good there. Manufacturing sales are negative as well, but not as much as expected, but still worse than last month. So manufacturing in Canada also not looking too hot there as well. Later on in the US, we had business inventories, which came in flat, and business sales dropped 0.1% versus up 0.2% previously. Inventories were expected to rise. So again, another small indication of potential softening in activity, both inventories going flat and sales going into the negative as well. Just one of those things we need to keep an eye on. The NAHB housing market index also dropped for the first time this year. It had been moving steadily higher from, I think the low was about 38 sometime late last year. Maybe a little bit of a pullback, quite steep for this number. You don't often see such a big variation. May just be a small one-off, a bit of retrace, as I say, after seeing, you know, all this year, those numbers rising. So we have to see whether that means something or not in the months ahead. Fed's Kashkari came out and said that we've been surprised by the economy's resilience and feels good about the progress on inflation. Inflation is still too high. The question is, have we done enough, or do we need to do more? Cutting rates would be a long time away. And just staying with the central banks, obviously expectations for the BOC rose after those numbers from Canada on the inflation front. Current pricing is we are pricing we're pricing unchanged. Still the bulk at 74% for their September meeting, and we're pricing 26% for a hike of 25 pips. For the Fed, even after that retail sales data, we're pricing SEP as a 90% chance of unchanged, 10% of a 25 pip hike there. Coming through to some of the data overnight now, Japan's Tenkan Index, this measures large manufacturers and non-manufacturers. Large manufacturers, as you can see there, was up 12 this month versus 3 prior. For non-manufacturers, sentiment index was up 32 versus 23 previously. So some other sentiment news in Japan looking on the positive side for that. House prices in China fell 0.1% year on year. No surprise to see that one dipping given the problems we're seeing in the property markets over there. While we're in China, China's SAFE said the Forex market is rational and orderly in July. Then we had some press out, the China Securities Daily, citing analysts saying they see little room for the yuan to drop. So maybe stealthily putting out some notes there that not to expect the yuan to weaken much further. We did have further problems with financing and the Zhongji and Zhongrong firms, because Zhongrong missed, according to the press, dozens of payments. This is the firm part owned by Zhongji, which has been in the middle of all this as well. They're saying one of the reasons why, or the main reason why they're not making whole some of these payments is because short-term liquidity has dried up. That might be why the PBOC last night added the most cash via reverse repos since February. They've also asked, or officials have also asked some funds to avoid net equity sales due to the slumping markets, stock markets over there. You may recall that last month, I think it was, they also asked banks and institutions to stop buying dollars if they could help it, to obviously stem the rise in dollar yuan. Coming over to the RBNZ, they left their OCR unchanged at 5.5% as expected, but their forecasts did show a small chance of another rate hike, and they also showed that a recession may start in Q3 2023. They did say that the OCR would need to remain restrictive for the foreseeable future. Activity is slowing in more rate sensitive sectors. Still a risk inflation doesn't slow as much as expected, and that measures of core inflation remain too high. Governor Orr was out afterwards saying raising the OCR track is not forward guidance, and that it's not a strong signal on a next move. So making sure that people don't get too excited about those forecasts potentially showing another hike, that it's not forward guidance. So there's not much discussion of a rate cut, and the steady consensus was easily formed. Zipping into the UK and a ton of inflation data out. Headline inflation fell a chunk as expected, down to 6.8% from 7.9%. Those expectations largely mirroring what we've been saying for a couple of months now, that I expected this month to see a big drop in inflation, and thus we got it. However, the core number stays sticky. Was expected to come down a pip, stayed unchanged. There will be a bit of lag between the headline CPI number and the core number. So this may stay sticky for a while, and that will be of concern, more concern to the BOE than the year-on-year number. So we'll see what that does next month. But for now, Bailey will start giving himself half a pat on the back that inflation is coming down. But Sunak will definitely be giving himself a pat on the back, irrespective of the core staying higher. In some of the numbers as well, RPI came down also, depending on where you look. Mortgage or ex-mortgage interest payments, which is quite a significant number, that came down to 7.9% versus 9.6% previously. Main RPI year on year was, as expected, 9%, falling from 10.7% previously. PPI numbers as well, and I look at these quite closely just for two reasons: to see if there's obviously overall price pressures, but just to see if there's a bit of a margin play between producers' input prices and output prices. Input prices came in more than expected, or fell more than expected, down 3.3% versus minus 3.1% expected. Output prices year on year not down as much as expected, only down 0.8%. So that means that prices call them selling prices if you like, are not coming down as fast as input prices, which is potentially good for profit margins, because you're paying less for goods coming in, and your final goods going out, you're still charging a higher price. So on the activity front, on the profit front, that's good news. For the inflation front, we're still seeing prices coming down significantly in PPI, which again is something that will filter through to inflation further down the line. All that data has kept traders thinking that the peak rate is gonna be 6% for the Bank of England. The probabilities this morning are a 92% chance of a 25, and the balance being for a 50. So a 50 is still in the frame for September, though I don't think that's going to happen, in my opinion. I also still maintain that I think the maximum we might get to for the BOE is 5.75, but more likely 5.5%. But I wait to be surprised. You all know that things are more sticky on the inflation front in the UK than probably anywhere else. Into the Eurozone, and second reading for GDP threw up no problems, coming in unchanged versus the flash numbers there. So all tickety-boo for that. Industrial production, surprise to the upside, 0.5% versus minus 0.1 expected. Well, not a surprise if you follow Mr. Christophe Barraud, who likes to guess these things, or he has proxies and regional surveys himself. He touted that these numbers will come in higher last night. So as you can see, they did, and year on year it wasn't as bad as expected either. That's all for the data anyway. Let me see if I caught any other headlines. Boom, 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 boom. No, I think that's it. Also up in 13 minutes. How about that, Kay? Anything to add?
I'm busy. My head is spinning with all that coverage of the past call it 18-20 hours. No, I think you've said most of it. Still misery in China, still sticky inflation elsewhere. Overall numbers, what we need to look at. Okay, yesterday's UK labor report was a bit of a half one, but then we saw those higher wages. So half okay, but still sticky, still nothing that is telling us that the market should or can actually start to price in reversals on yields, right? Even in Japan, the Tankan was pretty okay. We saw yesterday the numbers were pretty okay as well, and industrial production, I think it was, and things. No, it's all still going against what doomsayers may think, right? That I think that's the picture here. You don't get negative GDP in Europe. You still get a good Tankan. You then get good retail sales in the US. I think if you look at the global picture, I mean, really the dirty shirt right now is to find over in Asia is China, and the rest seems to be doing okay. Well, not doing great, but doing okay. So that seems to still be the overall picture that we get, right?
Yeah, exactly, mate. Yeah. So what did you make of the China stuff then? I'm getting a bit of a twitch. It seems like the market wants to.
Here comes the theory.
Here comes the theory. Yeah, I said it in the chat room this morning. It seems like they're dithering, and it looks like the market thinks they're dithering about measures. And I'm wondering if they're going to just come in with a big old size 12 and stamp on any of that at some point. Because they're not going big, and they're not talking about going big on any stimulus or stopping these problems happening. Is that something that could be around the corner?
I mean, they should. They should. I mean, the thing is, and I'm starting to compare it to the Greek crisis in Europe. They should, I think, at one stage say like, okay, haircuts, and we take over the rest of the crap. And let's get our internal economy off the ground again. They should do it, but it's China. They probably won't. So they probably will continue to inject, watering down the CNY or especially CNH, but that's supposedly a free market. And, I think we are not yet, if you translate it into currency, we are not yet at the stage where you go like, okay, now they're putting the big boot in it, and we shouldn't be short the currency anymore, because now things can perhaps look up. They're still injecting money. They're still, I think it's early next week or so, or is it later this week that we expect the loan prime rate, which may be adjusted as well. Probably early next week.
Yeah, is it usually on a Monday or something, isn't it?
Is it? Yeah, I think so. Yeah, they usually do it on a Monday and then leak it on the Sunday night, right? Just to be sure to have a gap on the Monday morning. Yeah, so they're still in that scenario. So still looking like they are trying to find out how bad the situation really is. And then you got the PBOC cutting rates, injecting massive amount of money, and then having that dollar CNY fixing ridiculously low, in a sign to the market that's saying like, you don't have the free hand to really sell my currency. It will weaken when we want it to weaken, but I think the market is not buying that argument. So that, I think, is a situation. We are not yet at the worst point, perhaps. Whether it's close, I don't know. It's China, mate. It's China. But I think the way that the market is trading, the way that the equities are trading over there, the market is telling them like, okay, maybe you're going to be too late if you want to weaken your currency to export again. Once things are going better, it's you're already behind the curve.
Yeah, exactly. I think it just feels they're trying to tap it with a teaspoon, and maybe they're going to put out a sledgehammer on it at some point. Doesn't mean that we won't see the currency weakening further. I mean, at this rate, it looks like 740. Those highs at 736 and 740 is a distinct possibility coming soon.
And that's less than 1% away. Huh? There's not even a big move from here if you look at the CNH. That's not even a big move. So I mean, the CNH is weaker, but I still argue this is not a panic move, and perhaps we need to have this kind of panic move. Where is that upper yellow line? Because I think I've got it too. Is that somewhere around 750 or so?
Let's see if I can get it in there. Oh, it's up there somewhere.
Just put your cursor on there. Where is it?
There we go. We're up there.
760. 50, 60.
50.
Yeah, I think that's very possible. Before we look to the other side. It's not looking good, I mean, and they're getting every day. If they would have like a very and they're still struggling with flooding and stuff like that as well. If they would have like a local economy which is in trouble, but then you have let's say the consumer also is in trouble, but the rest of the companies are not really feeling too much of a pinch, that would be a case of saying like, okay, the worst may be very close. But now every day we are hearing about those firms missing payments on bonds, and that is something that investors don't like at all, right?
Yeah. So the question for this one then is, if they suddenly did come in, let's say with big stimulus, let's say they cut the RRR, and they did targeted, let's say they gave the consumer, I don't know, bundles of money to kickstart all that easing, would you see a last move in the weaker one before that would turn it around and everyone would go, oh, they're finally making a positive move? We now see the one strengthen.
Yeah, I think that's exactly what we could have this move, and then I wouldn't call it panic, but really dump everything, the last bit that they have, the investors or whatever, and then take it up to that 750, 60, for instance, very, very rapidly, which is a 3% from where we are. It's for a major currency, it's a big move, but it's not something that we haven't seen, right?
Yeah.
Look at sterling, look at yen, look at other currencies. They can put in those kind of moves. So something that we could see, and then likely they will probably step in. Yeah,
Yeah.
you know, when well, and I think that's jumping back a couple of years. You remember when we were playing this Hong Kong and possibly leaving the peg and getting closer to the Chinese yuan levels.
Yeah.
And I said a couple of weeks ago, I think we may be in an inverse move, and that is that the dollar China is going to trade much closer to where the dollar Hong Kong is. And that, if we look at how the market moves right now, that's not completely out of the question, you know.
Yeah, maybe if that aligns, if they align, you know, up in the 770s, call it, maybe that's the time when they switch over the
Yeah,
Hong
that's
Kong
the
dollar.
end. Yeah, I
Yeah.
think that's the end of that could be the end of the whole story, actually.
Yeah. Okay. Well, we'll wait and see what happens to that one. I'm sure it's not going to happen during this show, but
No.
you never know. We shall wait and see. Right, I'm going to look at a few pairs going on. Stocks, I'm keeping an eye on S&P. This one is, I was looking for a breakdown through this. Oh, look at that. Pick your levels out of that one. I was looking for this breakdown of 45 the last few days, and we got it. It held overnight through the Asia hours, surprisingly not following what was going on in Asia stocks and particularly China, which saw some steep losses. But technically, it held the break, was holding the break, and we've broken back above. That wasn't looking too encouraging this morning, but now we're back below, and this short-term candle we're now looking to maybe hold below again, this 45 area. I did get into, I had a sell stop at 40, which got triggered. We haven't been able to push on from there. So right now I'm a little bit concerned that we didn't get any decent blow through on this break of 45. So I think, as this asset wants to do, can be a bit sticky for a while in trying to break through the lower levels. You can see we had this move down previously down here, then we've had a decent bounce up, then we've come down again, and we bounced again yesterday and took its time. So yeah, we need to get above 44.60 again to at least try and cement these lows at the moment, which are showing around the 44.30s, low 44.30s, 35. So we need to move back above 60 to potentially start building another bottom down here. But again, the overall pattern is still ongoing. We're still seeing lower highs and we're getting lower lows. So the trend is still continuing. It's not picking up any sort of speed. It's steadily going day by day, a little bit lower. But we are still seeing bounces, decent bounces when they want to happen. So I'd have no surprise if we saw this bounce up to, you know, maybe the 44, 70s, 80s. Again, just making another lower high though, before having a crack lower. But if we can hold below this 44, 45 area, then potentially we're going to put those lows to the test, and maybe we'll see a move down to the 44s. But as I said, for now, the trend is your friend. Dollar CAD, another one I've got a lot of interest in at the moment. We keep tapping on the 135s. We had a little mooch up above it late yesterday and overnight. Couldn't hold it. A couple of probes, let's call them those, a couple of probes above, but they're not holding. So I'm long this one as well, and I'm looking for a break trade again through this 135s, but I'm also long down here in the dip that we got yesterday over the data. We're going to need to break this 135 properly sooner rather than later, because if we don't, we're going to see a lot more shorter term longs running out of patience. They'll start getting out up into the 135. That will probably see us have a steeper pullback, maybe down to the 134s. Could be even worse, because all these buyers on this dip will probably be parking up just below that 134 area with their stop. So I wouldn't be surprised if we go a session, a few more hours, maybe 2 sessions without breaking this level up here, then I would be expecting a steeper pullback. And then we'll see where the dip buyers really want to return for that one. Of course, keeping an eye on what oil's doing, because we seem to be on and off the oil bus day to day, depending on the significant moves. Still coming off from these highs that we made up near 85s, back under this 82.50 area, 83 area, which again is holding as resistance. So all the hard work has to be done again. This is now looking more and more like a bit of a fake out. Got up to that next area of resistance that I had on my chart had for a while, goes all the way back to October 2021, and you can see it's had a bit of an on-off action over the course of the last year as well. So really getting into this 80.50 area is a bit of a test, bit of a support test since we made those highs. If it holds here, it gives it a chance to revisit those highs and maybe have a further move up back under this 80.50, and it could be all over and we're back in the box, and we then get to see, are we going to move all the way back down to the low 80, to the mid to low 70s again. So this is my sort of just a little bit of a measuring line, this 80.50, to see whether we're going to hold that or not. We're doing so at the moment. Let's see if that continues. Euro sterling, that's looking slightly weaker. It's continuing its trend down from the highs we made recently through this sort of intermediate 85-70 area, which is just one of those on-off levels. It can be slightly pivotal, as you can see here, where you're mooching around it, not deciding whether you want to hold it or get above or get below. In the end, we got above. We've come through that fairly easily. 85.50 is the near-term major support or main support from here, ahead of the bigger move down into 85s and that more solid level down into the low 85s there. So I'm not sure what I want to do this one. I'm still long a bit. I prefer to add down here. I may have a little feeler, just a short-term tight trade off this 85.50 if we're going to move down there, just for some interest today. Top side levels, the 86-10 area is again proven as resistance. Now we made the breakthrough. Still can't get through, and a proper test up to towards 87s. This zone still holding the traffic. So not an awful lot going on. We're still stuck in this fairly tight range. It's going to take, obviously, either we're going to come down and test 85 or we're going to break 85. If it breaks, then we're heading lower. Got to get through 84.80 really as a proper break. Or we need to take on this 87 area. So we're still in a range, and we've got these smaller ranges developing in between, or levels in between, that you can trade if you so wish. But for me, I'm just going to see if we're going to move further down. Kay, do you want to have look at a couple of bits and bobs?
Sure, mate. I'm just going to show a slightly different view, perhaps, on a couple of charts, because I'm in that dollar cat too, right? I've been in and out of that cat as well. I think your first level of interest is here, 134, 30, 40, and then if that goes, then I think the short termers will get a little nervous. I did the same as everybody else in the room. Bought that dip yesterday, let a couple go. What is interesting here is still, and we can stretch it actually up into the 136s, is this traffic zone. And I reckon that's holding it back from really breaking into the 135s. It's still not going to be straightforward. Yeah, we can have this acceleration now up to 135, 65, 70 perhaps, if it goes through 135, 135.15. But we do have to respect this. I think it's been such a a zone, this 135, 136.5, as I said, you can stretch it up to there. There's like, I know it's a percent wide, it's 150 points wide, but it really looks like the market is trying to make up its mind every time that we are trading in that zone. So that may again occur, in my opinion, if we get into the 135 zone. So unless it gets a lot of help from lower oil and gas prices, or lumber. I don't know if the people still watch that. It was a big thing a couple of years ago. Then unless there's really a clear direction on oils and stuff, it may struggle a little bit up here, and I wouldn't be averse to take some more off of what I've got running. Cable is perhaps worth having a look at, because we've broken up this short-term trend line, which was around 2730 this morning on the CPI data, where we have areas a bit everywhere, but your main level is still going to be, it's moved up just slightly from 128, the figure, to 128, call it at a quarter. That's going to be very interesting watch if ever we manage to get there. And on the downside, we are now looking at 127.25.40, I would say, as a first support. It goes back below there, then the party is over. As I said yesterday already, I still think we're in broader ranges in as well euro, dollar as sterling, but the sterling still has this preference right now, just because of the data, right? The data are look to be stickier at higher levels in the CPI, although it's coming down. That's an interesting one, and yet sterling is doing relatively well. So I think the market is still in this mood where they like the sterling for one or the other reason, and that's been going on for quite a while. So as a result, we've broken this little channel and now trading lower. Ryan was talking about 85.5. I've got it like just slightly below there, around 85.40, 45. But that's really your gateway, I reckon, down to this 85. 85 is going to be a big deal, as we've already been hammering on about, because you see prior tops, and the bottom here. So 85 is going to be a big level. If that goes, then we probably will see an acceleration down to lower levels. Why not into these 83s? But first things first, we need to break it. I think it's a big enough zone, and I don't know what. Do we have other data out for the sterling soon? I haven't looked at it, but I think it's going to really need something that pushes the sterling higher, or the market really being positive sterling, like on very good data, to say that that it's going to break 85. So going to have a look at it? Yeah, why not? That's the market. Breaking it, that's another story. So I'm not going to show the euro dollar again. We're still in those ranges. I'm going to have a look at what's happening, just to show you again my dollar yen. Bizarre, not bizarre, I don't know. It's holding up very well, dollar yen. Yesterday I actually managed the rest of my 144.5 call, because I saw the equity markets coming down, and I thought the yen would actually strengthen a little bit, and then we wake up this morning and we are just back there with higher levels on the sterling yen, bit on the euro yen, stuff like that. So dollar yen, for me, the big zone is still going to be here, 146.5, the trend line target, 78.6 of the big decline here, and this thing that happened there. And that's not only interventions, right? There was interventions, but that's also when the US data started to, the CPI started to turn around and come down. So for me, this 146, mid 146 is still a pretty important level on the dollar yen. Aussie still bearish. Medium term, nothing changes for as long as we're below 65.5, but we are struggling to stay under this prior low, right? Around 64.60. We're trading right on it. If the Chinese yuan continues to weaken, it should probably weaken a little bit as well. But I think for the really short term, we have to look at what's happening at 64.90 figure. For the time being, it's holding below there. But I reckon that if it goes back above 65 the figure, if we continue to fail below this prior low, we are possibly going to have a look at 65.5 again. So for my leftovers, I left to stop just through the figure and see what happens if the market needs to do a runner or not. If not, then we just continue to drip lower. I don't think we are going to see a big fast move lower, but probably to drip lower down into the 63s, 63, 50, 80, I reckon. And there we should, I think there we should really reflect on what's going to happen next. Kiwi still bearish, still looking upwards. 60 the figure is your first zone, but there again we saw a bit of retracement on the back of the RBNZ. Seems like we're looking at running out of steam again. So 60 the figure is your first level. If that would go, then you look at 60.5. Bit similar situation as the Aussie. Really, we are though trading below the 59.85 prior low, so that keeps it relatively bearish. Very nice look on the Euro Noki. Michael, our Australian friend in our chat room, came up with this trend line, and then I didn't really have this yet. We did look at this resistance up into nearly the 1150s, and now we're having this trend line again, and we're banging our head against it. So that's interesting. That's interesting. 1148, 1150 on the Euro Noki. It's an interesting level, undeniably. Okay, so that is one that we are going to monitor. Fly through, then we could be in for a bit more pain on the Norwegian kroner, but it could be enough for now. So that's one that's interesting enough to monitor. Yeah, we have to look at the CNH, right? We're still in break territory. We have failed or banged our head against the 127 extension for now, but as we have been talking about this, I really think I've got this trend line as well that Ryan was already shown. It's still too much of a misery to start thinking about a reversal here. Of course, it's going to come one day, but we haven't had, even though this move pretty steep, if you look at the daily, we haven't had really the blow off top yet move that we may have if the market really turns around and doesn't want any Chinese yuan anymore. So that's one to keep an eye on. For the rest, is not much really else to add to it. Dollar mix is still holding below 17, wants to move higher, broke, but then it's just breaking out of it horizontally. So we are still watching really 16, 90, 17, and then 17 and a quarter, which is probably the gateway back up to 1740s. For the time being, very, very, very neutral, I would say around here. Find the same thing back in the Euromix. Yeah, sterling Aussie, I know. I'm not looking at our size or stuff like that. You know, the market can remain irrational for longer than we can remain solvent, right? That we know that. There is this interesting trend line here, but we are trying to break above it. And for as long as the market has this kind of mood towards what's happening in the CNH and the Aussie, and then versus the sterling on the other side, it's hard to fight it. But we are, of course, getting into interesting zones here. 198 is 78.6. I'm watching the game for the moment, but I still am much rather a deep buyer and trying to perhaps job it from the long side than really trying to pick a top here. If really worse comes to worse for Australia or so, or even better for the sterling, this is pretty dynamic cross, you know, and something needs to change in both currencies or one of the currencies to really call a top. If we start to get back below 580 and then start to confirm now under 4.75, that's probably going to call for a at least temporary top. Okay, what else? Retail says on Friday in the UK. Thanks, Gavin.
Yeah,
Ali,
that's the last of the big data, really.
dollar is overbought across the board. What makes you say that? If you look at, and I'm never looking at it, we are at levels that where you can say it's high compared to where we were, but if you really want to look at it, we haven't really broken out and ramped higher, right? I don't know if I'm having a feeling of the FOMC to be dovish. That's why I'm long gold. Okay, long gold, yeah, you know, 18, 19, 19, the figure on gold is good enough to keep a very close eye on, right? You have this low 1890s and the 19 that traded before as well. It's good enough, but for the time being, it's not performing a turnaround. I think to see this start to move higher again, we have to move back up above 1915 and hold. Okay, this is what I think about gold, and then for the rest, you just look at yields basically for what's happening now. And you're talking about the FOMC, and actually, it's good that you bring it up because I think Jackson Hole, 24th, 26th of this month, could already give us some hints about what's going on in the central bank's world. Okay, it's not every year the case, but we've had Jackson Holes where either people change their minds, either people coming up reaffirming firm stances, like for instance rates higher for longer in this case, or are we starting to see cracks, or are we starting to get to levels where they're happy? It could be Jackson Hole already. Okay. Right.
Yeah, just on Ali's point, and yeah. I want to pick something up because I don't know exactly what you're thinking, Ali, but you're having a trade in gold with a 15 pip stop and a 9 pip profit on an FOMC. The FOMC isn't for another month, so I'm not sure how you're tying up your trade with the FOMC. This trade can be won or lost in the next 20 minutes, let alone in a month's time. If you're trading the FOMC, you want to be trading on different timelines, so you probably want to be trading on different price points to build in that time into it. You know, as Kay's mentioned, we are on fairly decent support here. Maybe Kay, after you finish with silver, I'll take the screen back and just show that.
Yeah, I can show it again. You can just talk about it. No, I was just saying silver is pretty neutral here. Gavin also spotted this support zone here in the low 22s. I think the trend line here as well. If ever we get down to low 22s, I may start to think about adding some to my long-term longs, which are still very low compared to what I really want to have at the end of the day. I'm going still to leave ample room to add, but this is a very long-term play. I think sooner or later, and I don't mind when it happens. It's gonna go, but we will see. Actually, China may be helping silver if they manage to crawl off the ground. Yeah, neutral here. We have to get back above 23.30 to start moving higher again, in my opinion. If it goes above there, I'm probably going to press a little button as well. Yeah, gold. What did you want to say, Ryan? Are you take the screen?
Yeah, let me grab it because I wanted to
Sure, mate.
I'll look at Roberto's queue as well. Hopefully my screen will share. Let's go. Can you see that okay?
Yep. Yep.
Cool. So yeah, Ali, you're trading basically off this level down here, which is all fine and dandy. But if you're trading the FOMC that's a month away, why have you got a 9-pip profit target? I can understand your stop is fairly tight below the 38.2 fib, which has held previously, so a level all on its own now. And we've got the DMA down here as well, the 200 DMA, where are we at? 1904, give or take. So I can understand that. But if you're trading the FOMC, if you get a hold here, you're potentially going to get more than nine ticks out of it. Now, I'm not going to tell you what to do with your trade, but I would think if you do get this hold, maybe only look to maybe take a bit off your trade up here. You can half it, 3/4, whatever, put most of it in the bank, leave yourself a little bit just to see, because if this is a strong hold of a decent, it could be a decent double bottom, you might be seeing, 1930s, 1950s, maybe even another run up here if your FOMC then is how you want it to turn out and they're a bit more dovish and you see gold rally. But I think playing an event that's a month away so tightly with your trade, I don't think adds up in my opinion. That's just my thoughts anyway. You can trade away, and I hope you make your profits either way, mate. And Roberto, how do you trade something that's been running higher? Well, the first instance, Kay mentioned, you got this trend line up here, though we do look like we're breaking it. So if you wanted to try and pick a top, you'd probably lean against that trend line in the first instance, with a stop just above. So likely you might have been stopped on that one. The only other way to trade it, there's two other ways you can trade it. Now, forget the time scale on this. It's all about the price action. This is what you want to start trading. When you make a high, you've had a bit of resistance prior to that high. You've made that high, hasn't held. You've come back under. That former level has held as resistance. That's your price action. That's what you want to see when tops form. You want the price action to back it up. You don't want to see highs, a little dip and then a new high, then a little dip and then a new high. That suggests you're going to be carrying on the move. So look for the price action to make a high, come back down, and then hold below that high. That gives you some conviction to get into shorts and start fighting it. Where it goes to is anyone's guess. Sometimes it will come down quite significantly. Like here, again, we've done the same sort of pattern. We've hit that same resistance area, made that high, just made a new high. So, it was a bit dangerous there, but then we came back down below, and now you've had a steeper pullback. The second way to trade the tops is to wait for the breaks back below the former resistance area. So you could have maybe traded short here, left all this lot alone, and traded this move. Again, forget that this is over a period of 6, 7, 8 months. These patterns happen on every single time frame, so you can use it for trading every single scenario. Sometimes you might have to wait a bit though. So, trying to pick tops in things, it's always tempting, but let the price action develop and let it tell you that it's made a top. Let it give you the indication. Enough's enough for now. Doesn't matter if it lasts 5 minutes, you know where your risk now is. You can lean against something significant and say, right, well, if we break above here, we've had 2 goes. Now, if we break above here, I don't need to have a stop 100 pips away. I can have a stop 20, 30 pips away, because if that level goes, it's likely it's going to break properly and we're off running again. So it's all about not needing to risk a lot to try these attempts, but let the price action give you those clues. Let it show you we can't get above this level for a while. Then it gives you an indication. That's what I'm worried about with dollar CAD. Just nipping back to that one quickly. I want 135 to break, but we're not breaking. So if we can't break it and the clock keeps ticking, then we're not going to go above there. And then all of a sudden, the market's going to go, enough's enough. We keep trying. It's not working. We're going to get out. And then you see a pullback. So shorts can mess around up here as well. You can short into 135, but if we get above 135.10, likely we're on for a proper break. So, short 135, stop at 135, 15, 20. You don't need to risk a lot. If we do hold here, then potentially you're going to get 134 out of it. and plenty of money, but let the price action tell you when to get in on those tops. That's my thoughts anyway. Kay, you got anything you want to add to that? I know you look at different ways to pick tops and bottoms as well.
Yeah, and I don't want to confuse people.
Right, okay, you do tomorrow.
No, I mean, yeah, because I'm initiating positions perhaps differently than some other people. But yeah, I mean, if you want to lean against stuff, then you have to the one thing as well. If you want to lean against stuff and you don't know, you don't have a bias. So if you want to either go short versus a top or trade a break, then you need to be very, very disciplined with your stops.
Yeah.
I usually trade with a bias, so I'm going to be doing that perhaps slightly different. No, I think you're right. You look at the price action, and that's in the end what we all have to do. I mean, it's price action which that will tell you whether you're right or wrong. There's no 100 ways about it. That's just a simple thing. But if I just want to add something, is that don't get sucked away in stuff that trades in between levels, because it's very easy to say, like if you take, for instance, now just stick to this sterling Aussie, and if you let's say if you miss it and it starts to go down into the 196.5, whatever, and you go like, oh shit, I missed the top in the 197s. That's where you start to risk your account, because you're going to be trading because you think that you missed something, and that's where you have to be very disciplined, and either you wait for a retest and then try it again, or you say sometimes it's something has broken and failed, and then you go with it, but then you have to stick with it for a little bit longer. So it's very tricky to you really need to wait for things to cap, to bottom out, or to pick a trend, because trading in between levels is very detrimental to an account.
Yeah, and also you need to manage your risk as well. You know, if you're going to piss against a very strong wind, then go with a smaller trade. Go with smaller trade size, because you know then you're not going to get caught trying to pick every single top and getting burnt. You know, so reduce your trade size until it starts going your way. You can always increase it as it starts moving. I mean, this short-term price action, it doesn't look toppy to me yet. You know, we had that high, had a little pullback. Now we've made a fresh high. This is in the course of, you know, today. So it doesn't look like this move stopping. If we get a move down and then we start banging our head again here at this 97.38 area, and we bang our head a few times, well, then that gives you a bit of conviction to try a short, because you know if you break it, then we're probably off and running again. So very tight trades you can have here to try and pick that top. Let the price action give you the clues, as I say. Anyway, thank you very much, Kay, for all your valued input. Good stuff as always. And thank you to the viewers for coming to the Flow Show. Don't forget, we do this all day, every day in our chat room. So if you want to come and check us out, please feel free to do so. Other than that, have a great day the rest of your day. We shall see you all bright and breezy tomorrow. Thank you very much.